Hello everybody and welcome once again to the weekly review from forexlivetoday.com. Today is Saturday 18th of June 2011. Okay, today we're going to discuss a few fundamentals because they have been the drivers for the moves this week. So let's begin with the euro. We'll start by saying that we have an open short position on the euro. Now the reasons for this are largely fundamental. Firstly, I'm sure you're all aware of the news regarding Greece. Greece, a big risk to default. Now, what is the problem if Greece defaults? Well, that is a big problem for the euro. Why is it a big problem for the euro? Because the euro has advertised itself as an alternative currency to the US dollar. The world's reserve currency is the US dollar, and the euro allows countries to diversify a little bit in their reserve currencies. Now, if EU member countries start defaulting, this will have consequences for the euro and its stability and its reputation as an alternative reserve currency. More fundamental reasons to be short the euro are the risk of contagion. We have the French banks heavily involved in the situation in Greece. We have Moody's on Friday have just placed Italy, another country now, on a credit watch. So that's lots of EU countries on credit watch. So things not looking great for the euro. The one positive for the euro is their LIBOR rate, their interest rate. So if you invest money in the euro, you still get a greater interest return than you do if you invest on the US dollar. However, the rate expectations, the 12-month ECB interest rate expectations have fallen. So looking ahead, we don't have that interest rate. So all of these reasons have prompted us to be short euro. Long-term swing trade, so we've only entered very small to begin with, and then we will scale in as it drops. Okay, some other reasons to be short the euro, and we're going to start talking a little bit about risk. So if you don't actually understand the way risk works in the forex market, you might want to get over to Forex Live Today, and here on the front page we have an article, Trading Risk in the forex market, and it will explain to you what to look for, how to identify risk, what is risk appetite and risk aversion. And being short euro and long US dollar, it means you're playing towards risk aversion. You are betting that people are going to move away from riskier assets. Now if we go back to the chart, which is here, you can see the moves down have been large, panicky moves. This suggests the market is jittery. Let's look now at some volatility. Here we have the VIX, which measures the volatility of the S&P 500 equity market. Now, equities can indicate level of confidence, level of risk in the market. So as you can see, the downtrend here, this means that volatility has been decreasing. Things have been stable. We had this spike is from the tsunami, so just discount that spike, and then you can see that we've got a rounded bottom and it's starting to spike up. This means that volatility over the next 30 days in the S&P 500 is expected to be high. If we look at the S&P 500 chart, which is here, you can see it's been in a downtrend since the start of May, so that's over 6 weeks now, and it's fast approaching this level of support. If this level of support gives way, that's an indication that the risk averse move is on. People are really moving away from risky assets. If this is then confirmed by the German DAX, for example, if it breaks key support, if the FTSE 100 breaks key support, if some of the Asian markets, the Nikkei, the ASX in Australia, if they all break key supports, there is fear, there is a move away from risk. Another volatility chart that I'd like to look at is the JP Morgan G7 Currency Volatility Index, and you can see it is spiking as well. It has spiked up to yearly highs. So, or sorry, not quite yearly highs, but monthly highs. And so we can see all of this is an atmosphere of nervousness, perhaps a little bit of fear, and an indication that the market is not as confident as it was. All of these reasons have contributed to our short position in euro. As we said, it's a longer term short position, very small at the moment, hoping to add as we move down. Currently, the technical outlook, we have a triangle here, but it has, on Friday when it rallied, it did run into some resistance. On Sunday we have a big meeting from the Euro member countries regarding Greece. In all likelihood they will approve an aid package. This was for the reasons for the moves down when there was disagreement over what type of aid for Greece. The IMF announced that they expected Germany to guarantee things. Then Germany came out and changed their stance, so we had the rally. So these daily news items are having a big effect on the volatility. There's still no clear trend to speak of other than what we have to go on here with this downtrend. So essentially the euro started the week at 143.10 and ended the week at 143.10 with lots of volatility in between. Moving on to dollar Swiss. Last 2 weeks, some indication of a perhaps bullish run, but it has been capped at this resistance here, which was previous support, became resistance back here, and has proved to be resistance again. So again, as we've been saying for weeks, we want confirmation before risking any long here. Cable trading in a nice channel, daily channel from the start of the year. It threatened to break to the downside on Thursday, but on Friday rallied back into the channel. This break could be an indication of future direction. For now, you would have to, if you were playing the technicals, you would have to say that this would be a long. But hey, if you get another break below here, some significant downside possible. Dollar yen, still this slow sloping downtrend comes into play, and I've added a third trend line to the center of that channel because you can see it has found resistance at this level more than once. So perhaps some sort of standard deviation channel happening down here. This could be worthwhile to trade. Dollar CAD is our correlated pair with the equity markets. So again, as I was talking about, study the S&P 500, the DAX, the Nikkei. If they break key supports and at the same time dollar CAD is making new highs, breaking key resistance, then you have a confirmed risk aversion move. Anyone who has been reading the website will know that we have retaken our short position on the Kiwi dollar. Small position again because it is a reversal move. It's not trending at all really, but we've had breaks of this support, which previous resistance support broke this. It then also broke the low from the 3rd of June, which was enough to have us short on the retest of this low. So it's a little bit underwater at the moment, but again, small position, longer term, so we are willing to give it more time. These two positions, euro dollar and Kiwi dollar, have left us exposed a little bit to the dollar movements, so we may look to hedge these trades. If we see continuing weakness in the dollar, we may look to hedge, and Aussie, the Aussie may be one of the currencies to do it. If the Aussie can break out here to the upside, which if we see further dollar weakness, it probably will, we may take a long here to hedge our euro and Kiwi shorts. Aussie Swiss, this is a 18-month chart approximately, and you can see a very large wedge here, so possible swing long opportunities here for traders. So take a look at that one. Aussie yen, symmetrical triangle, again ranging. Will be very interesting when it reaches the apex of this triangle to see what happens. Something to keep on your monitors. And finally, Swiss yen. Swiss yen has come off its highs and is back at support. A break of this to the downside, then a possible retest, and then further moves down could be a good trade to play. Alright, so that's the major currencies and some of the minor currencies, the things that we've been looking at this week. So just to reiterate, this week the volatility has been fundamental based, so there has been lots of news and most of it has been bad for the euro. Now, having said that, we know that the economic situation in the US is dire, no other way to put it. But the euro strength against the dollar has been based on, the interest rate differentials and things like that. Now, if that interest rate differential starts to give way or retract, also these EU member countries start defaulting, which is a very good chance that Greece may, and some other countries are at risk of needing bailouts and this sort of thing. So possible long-term weakness for the euro. And all of those other setups we've talked about, so keep your eyes open. Good luck trading this week. If you have any questions about the video or anything you'd like to talk about further, leave us a comment on the website or join the forum and discuss it in their new forum on Forex Live today. Thank you everyone, have a great weekend and a great week trading. See you next week. Bye for now.